That's the story, that we've seen a sharper recovery, maybe ahead of Diwali. It's the bulls who want to take control, but we'll of course have to see whether that continues or not.
And we've got a packed show today, so let's straight away invite the management of Nitin Spinners. It's a decent set of Q2 numbers. The company saw good EBITDA and revenue growth. Margins are flat. We're now joined by Dinesh Nolkha, Managing Director, and Nitin Spinners on the show. Dinesh, morning and afternoon, and thank you very much for joining in. We've seen a pickup in your revenues, up 19% quarter-on-quarter, 46% higher year-on-year. What led to that, and is it sustainable?
Thank you very much for having me. First of all, let me wish you all at CNBC-TV18 and your viewers a very happy Dhanteras and Diwali. Coming to the numbers, basically this increase in our revenue has been due to our capacity expansion. We have expanded our capacities in all our segments of yarn, fabrics, for woven finished fabrics as well. So that has led to this increase in the revenues. So this is all sustainable, and further we are going to add whatever capacities. Still something has come on the frame, and some more additional capacity which is going to be started within this month is again going to add to the further revenues.
Okay, so 20% growth is sustainable and there's more capacity expansion that is in place. Mr. Nolkha, happy Dhanteras and happy Diwali to everyone at the company as well. I just want to understand what demand is looking like right now, because as you're saying, this revenue growth was driven by the capex expansion that the company undertook. What about demand, both in domestic and export markets?
All about export markets, we had seen a very subdued demand in the export markets for last 1 year. But for last 2 months, as the data is out already for the whatever the quantity is being sold, because India as a whole is about selling 115 to 120 million kgs, which is as good as what we used to sell in 2021 and 22. So I think the demands are normalizing all around the world, and we expect this to be maintained. Most of this low demand in the international market had happened because of the debottlenecking of basically destocking of the inventories by the most of the retailers. I think that is same thing which is happening, which is played out, and we think the demand will be very, very stable going forward.
Can you just quantify the... Yeah, go ahead.
And for the domestic markets, definitely, since the prices of raw cotton has gone down substantially over last 1 year, it's a normal tendency of all the retailers as well as all the dealers in the system to reduce their stocks. So that has actually also led to a reduction in the demand on the domestic market also. But I think that is also going to normalize in next 2-3 months, and we should see good demand coming here as well.
Got that. Dinesh, can you quantify the incremental capacity which gets added on in Q3, which could boost your revenues?
Actually, we had just added, we had produced about, if you see our numbers, we had produced about 21,000 metric tons of yarn in this particular quarter. Now, going forward, this capacity is going to be about 25,000 tons of yarn every quarter. Our annual run rate would be more than 100,000 tons of yarn going forward. Plus, our woven capacity is already 40 million meters, and we are already running it at about 35 to 36 million meters annually. So both the things will further ramp up during this particular next 6 months period.
Okay. With all the expansion that will come in place that you're talking about, what will FY24 growth look like, margins as well? And now that CapEx comes on stream and we just have 6 months left, can you tell us your plans for FY25 as well in terms of growth and margin targets?
At this point of time, we have just completed our expansion, so we are not going to add any major capacity for this next FY25. We are just going to consolidate and ramp up our production capacities and bring the utilization level to good 90-95% levels, which is hovering around about 75 to 80% in some of the segments of our business. So that is our first priority. And going forward, normally, as you see, if you see last 10 years, our average margins have been in the range of about 15 to 16% levels. So, but for last 4 quarters, they have remained at about in the low 10-11% margin levels. We expect the normalcy in the margins coming back, with cotton prices going down and demand looking up.
Now that the capex is entirely behind the company, could you give us an update on the company's balance sheet? What is the operating cash flow that you generate? Do you have debt on your books? Do you have plans to bring it down? Now that no more money is going to be allocated and utilized towards capex, can you tell us what you're going to do with the cash flow?
Basically, we are generating EBITDAs or operating margins in and around 400 crores. That has been what we have been doing, barring the year 22, where the EBITDA margin was quite high up to a level of. First of all, we'll pay down the debts. Plus, we are also going to invest some money for the renewable power. We are seeing that Rajasthan being a very nice place where the generations are very high in the solar power. So we are going to add some more capacity on that side. We have already added a reasonable capacity in the solar power. That will be our plan for 225, consolidate on the sales side and trying to bring down the cost and efficiency level.
Okay, take that point. So, Mr. Nolkha, if you can tell us what the cotton prices are trending like right now. We spoke the last time, it was around 62,000 rupees per, I would say, per candy. It's been a while, but since then, how much the prices have dropped? And do you expect this to continue? How does it compare with international prices?
At the moment, cotton prices are in the range of about 56,000 rupees a candy. This is very, very near to the MSP prices, minimum support prices. Last year, since we last had a talk, since then, the government of India has increased the MSP by about 10%. So that has come into play. So it is coming very, very near to the MSP. So we are not expecting too much decline in cotton prices in India. Of course, the cotton crop is also slightly lesser than what was anticipated earlier. So putting both the things together, the cotton prices are very near to its lows. Now coming to the international prices for good last 3-4 months was hovering around 85 cents, 84-85 cents. At that level, there was a complete parity with the international cotton, Indian cotton. But again, in last 1 week, the cotton prices internationally has gone down by about 10% and have come down to a level of 77 cents. We have to observe whether this kind of lower prices is sustainable in the international market or not, and then only we'll be able to judge how more the Indian cotton prices can go down.
Okay, all right. So that is something that we'll be tracking closely. Mr. Nolkha, it was a pleasure speaking with you. Thank you so much for joining us today with all those details. So good numbers, and the street has rewarded them as well. The stock is high by 4.5%. Wishing everyone again a very happy Diwali.
Thank you.
Okay, with that, we'll take your leave. We'll actually get into a short break. When we come back, we will get chatting with another company, Anthony Waste Handling, and this is the company which has reported numbers. We'll be discussing this on the other side.